Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space. Joining me again today is David Erfle, editor of Junior Mining Junky. David, welcome back to Kitco.
Thanks a lot, Paul. Great seeing you again, and thanks again for having me on so soon.
Well, I think for the gold bugs, we'll have to have you on more frequently because last time we had you on, gold was hitting a new high. And again, this week, gold's hitting a new high. So there's perhaps a David Erfle effect on Digging Deep. Although two instances is not much of a correlation. Please note that Digging Deep is not investment advice, and the opinions expressed here today are our own and not Kitco's. David, M&A is in the air. Last week, we saw two transactions. Alamos Gold is to buy distressed gold developer Argonaut Gold for $276 million in an all-stock deal. And also, Mako Mining is to acquire Gold Source mines. Different scale of deals there, but both are important in their own way. Let's start with Alamos. For Alamos, their key thing is the addition of Magino, which is the gold development project in Ontario. Which it is planning to pair up with its Island Gold Mine. It believes that can generate synergies of $515 million and help the company onwards towards production of over 600,000 ounces a year, up towards 900,000 ounces a year. 40 cents per share, 34% premium for Argonaut. But Argonaut's assets in the USA and Mexico will be spun out to existing shareholders. It looks like a very good deal for Alamos, and it's also reminiscent of the deal for Canadian Malartic, whereby Agnico Eagle Mines got the half of that operation from Miner Gold.
Absolutely, yeah. But this is, as far as Argonaut shareholders. This goes back to where I was an Argonaut shareholder back in a couple of years ago when Pete Doherty was building a mid-tier miner. He was doing a good job doing it. He was doing it with minimal debt, and things were going along swimmingly. And all of a sudden, the Magino mine capex just got out of control. He didn't convey that to shareholders, and it basically cost him his job. I mean, the man that built the company was forced out of the company because he mismanaged capital markets, and then he mismanaged the capex on this Magino mine. Magino mine was going to bring down their costs for the company in their in total production, and once they got completely out of control, just like Cote and a few other projects. Unfortunately, it cost him his job, and I ended up selling the stock, I think, at $1.90. For my subscribers and I did well. We made money on the stock, but this one had like 10-bagger potential. We were looking at big gains in this thing, and unfortunately, now by the time it finally does get taken over, it's basically a take under. No Argonaut shareholders have made money on the deal. Of course, it's as far as Alamos is concerned, that coin is flipped. It's a fantastic deal for Alamos. I mean, when's the last time you saw a takeover happen in this sector and the company that's taking over the junior with dilution goes up 7%? So what this does for... I'm sorry, go ahead.
I was just going to say, it's a fascinating deal and great for Alamos, and another one, as you say, of your take unders. Maybe that's a phrase you need to copyright, David. But I think one thing that's also interesting, as you mentioned, the capital blowout, and that didn't seem to ever stop or end. And this deal is perhaps a reflection of that, because as part of this, Alamos is to provide Argonaut with a private placement equity financing of 50 million Canadian. So it looks like even without this, Argonaut would have had to have gone back to the market or sold something else again.
Absolutely. And the projects they're spinning out, I believe those Mexican assets are assets they could not sell in a depressed market to get that capital. So, Richard Young, who was saddled with this, with all this when he came in later, he's done a good job in trying to get this thing together. But, as far as getting it together to where the company's going to be profitable with what they have, and trying to build Maginot at the same time while costs were spiraling out of control was too much to handle. But as far as, Alamos is concerned, this is fantastic for them. They don't have to build another mill now. And this saves them a lot of money, and they can swoop in and get this thing really cheap. And and as far as the market is concerned, they see the same thing. So it bid up Alamos at 7% when the deal was announced. And on the flip side of this coin, the Mako Gold Source deal is another take under
I want to
as
touch
far
on
as
that
Gold
in a
Source
moment,
is concerned.
David. But this deal here is certainly one where the money's going to be made by the next owner. And, I interviewed Alamos CEO John McCluskey during PDAC a few weeks back, and I asked him specifically about future M&A. The company's got a history of doing good M&A. So check out, for our viewers, check out the video on the Kitco Mining YouTube channel and see his poker face as he answered that question, because obviously this deal must have been at quite an advanced stage when we spoke. But it does seem a deal is not done until it is done. Now, David, let's get on to Mako. Shark attack there. Mako Mining is to acquire Gold Source Mines. It wants the Eagle Mountain development project in Guyana, which he thinks bears some similarity to its San Albinos operation in Nicaragua. 55 cents per share, some $34 million Canadian, a 40.9% premium. But I think in your lingua franca, David, that's another take under.
As far as Gold Source shareholders are concerned, yes, but I can understand why Mako's doing it. That's a good project, and it gives them jurisdiction diversification because they're in Nicaragua. Those sanctions are still in place. Those U.S. gold sanctions are still in place in Nicaragua. So that's a great deal for Mako shareholders. But it's not as much of a take under as far as Argonaut's concerned, because Argonaut got really, really depressed. It sold down to basically where it was taken out, the price it was taken out at, and then it took another big, huge dump when they came out telling the market that they were going to need more capital to fix the early problems happening at Maginot as they start up the mine. So. Wrapping all this up, this is great for the sector. These M&As need to happen, these mergers need to happen, and it does bring attention to the space as far as the Alamos deal, because that stock is trading at a 52-week high. There's not very many, even though the gold price now basically doesn't have any resistance. It closed at a daily, weekly, monthly, quarterly all-time high last Friday, and it's up again today. But gold stocks, you have to turn them upside down to get them to look the same, most of them. But as far as Alamos is concerned, they're trading at a 52-week high.
Okay, and this transaction gives Mako a pathway to more than 100,000 ounces a year of gold production. Let's talk a little bit now about a company that hasn't been doing M&A. Who's next? It doesn't look like it's going to be Barrick Gold. For me, one of the biggest things in the past week was the fact, or the bombshell, that Barrick Gold became the third largest gold producer by market cap, having been overtaken by Agnico Eagle Mines. Kitco Mining's 2023 CEO of the Year winner. Barrick Gold is now the third largest gold producer in the Western world. How has this happened?
Well, basically, it's funny because Barrick started this major M&A when they took over Randgold several years ago, and then other companies followed suit, like Newmont, when they took over Goldcorp, and then they did one better when they just recently took over Newcrest and got twice as big as Barrick. So Barrick's been concentrating on, I think, on internal issues as far as exploration is concerned, as far as getting their project that they already have bigger. And I think I remember hearing Mark Bristow, CEO, say they want to concentrate more on copper, and that they see the future for copper as being very bright. So I think it's happened basically. And when he came out, when Newmont came out and announced the deal for Newcrest, he said, we don't want to get big for just getting big's sake. And basically, he said that he's waiting to see if there's a deal that's more accretive to shareholders, saying, hinting that he didn't like the deal with Newcrest and Newmont. But
let's get to counterfactual for a moment, David, because Barrick Gold for a long time was believed to be in the running to acquire Great Bear Resources, which was at the end acquired by Kinross Gold. Since that transaction, Kinross Gold has been on a tear. Did Barrick really miss a step by not, upping its offer or doing whatever was necessary to satisfy the Great Bear shareholders?
yeah, I mean, it's funny you say that because then the scuttlebutt was that Barrick might eventually take over Kinross, because Kinross is a strong takeover merger candidate now that they've divested all their Russian assets. So, they're extremely undervalued as far as I'm concerned. I'm a shareholder. I hold the stock in my my IRA account. So, yeah, I think so. I think there's going to be a lot more M&A to come here, and I think you're probably going to see more M&A in the major space and the mid-tier space as well.
Okay, now you mentioned the copper. A lot of the good news to come for Barrick is going to be in sort of 2 or 3 years' time. And that includes the copper super pit in Luanga in Zambia, I believe, and also the development of Reko Diq in Pakistan. So is it a case of, Barrick has slumped so low that the only way is up now, that, now Barrick is potentially interesting to look at?
Well, yeah, I mean, you could say that for a lot of gold stocks. The only way is up now. I think the downside is minimal here, as generalist investors continue to basically speculate on Bitcoin and buy meme stocks and AI stocks. The gold price breaking out is basically happened very quietly because Bitcoin and the stock market are also trading at all-time highs. So they've kind of got lost in the shuffle. So gold stocks remain just, I think, the most under-owned asset on the planet as far as what they're digging out of the ground is breaking out of a 13-year cup and handle consolidation, which is hugely bullish. And the upside projection of that cup and handle breakout is around $3,000. So as far as gold stocks are concerned, these Q1s, these Q1s of majors and mid-tier miners are going to be fantastic with the gold price averaging, I think, a little less than $2,100 an ounce in Q1.
Okay, let's change tack, but stay with the red metal with copper. Tough times for copper explorers. Neil Adshead and I touched on this in the previous episode. Now, Talk Resources has implemented cash preservation measures, including an immediate 50% cut to all salaried North American senior executives, deferral of those salaries until a financing permits payment, and reduction of non-essential employees, contractors, etc., etc. It's also dropped the option on its Andrea project in Chile to focus on prioritizing its Margarita and Santa Cecilia projects. Talk isn't alone in being a junior that's impacted by the financing window in the financial markets being closed. So why aren't more juniors taking measures like this?
Well, it's kind of a damned if you do, damned if you don't type of situation. A lot of these juniors, they need to generate interest in their stock and their company by putting out positive news releases on what they're doing on the ground. And if you scale back exploration when you're an exploration company, you're not going to have a lot of positive news flow, and your stock is going to sit there while other companies start moving up ahead of you. But on the other hand, if you spend too much money and you're not getting rewarded for it, then you've got to worry about too much dilution, because the next time you have to raise, then your stock price is depressed, and you're going to have to raise money at a lower stock price, which raises your dilution. So they're in a very difficult situation, and it all comes back down to how you manage the capital markets, and basically, how good your project is. Because let's face it, Rick Rule is correct. Like 85% of these companies, they really they're pretty much lifestyle companies, and they don't really have anything viable. So we still need to see a lot of M&A. And we, especially in the junior space, a lot of these companies need to get together and, combine their projects, especially if they're close by. And these management teams have to manage these capital markets, properly, correctly. I've watched a few companies, and even one or two of them that I've been invested in, where the management teams, they've been successful in the past in a different environment, right, where they've raised money at the right time. They added ounces, they minimized dilution, and they've tried to do the same thing in this market, and it's a totally different market from when it was before, back in 2010, 2009 to 2011. So even companies that have been successful, management teams that have been successful in the past, have had really difficult times managing capital markets this go around. So I understand their problems, and it's really difficult right now.
And the conditions, state that you basically need to be creative. And I'd like to bring up another example of that, a new approach. 30 kilometers or so to the north of Torque's Margarita project is Tribeca Resources, which announced an innovative option deal to acquire the Chiricuto IOCG exploration property. $20,000 up front, nothing strange about that. But the innovative and creative thing there is they agreed to pay 1 cent per pound of contained copper equivalent in the measured and indicated categories of a future resource estimate, with a minimum $1 million, maximum $10 million, plus an annual 5% exploration levy payment. Creative deals. Guess where CEO Paul Gow and director Thomas Schmidt cut their teeth?
I have no idea.
Xstrata and Glencore. Mining investor Dave Lotan, who I hope to get on Digging Deep at some point, gave a presentation at the start of the month about investing in junior stocks, and advised people to take notice of what former Glencore people do, as they will almost always be the smartest people in the room. Perhaps another example of that happening now there for Tribeca Resources. David, finally, very intriguing news story out this week that I picked up on Mining Magazine, which was that the US government may use the Federal Bureau of Investigation, an essential intelligence agency, to use their intelligence capabilities to give an edge to US critical minerals companies. What do you think of that?
Wow. Yeah, that's a little on the aggressive side. Yeah. But you've also heard about, FBI now being armed by the U.S. government. It's really getting dicey as far as governments are concerned, and getting involved in a lot of these things. So yeah, it's very difficult to manage a lot of these situations right now.
Being a bit sneaky, I think if the US government wants more intelligence on minerals discoveries, well, there's nothing as tight-lipped as junior exploration space, is there?
Exactly.
And let's leave it on that note before we get cancelled. David, a pleasure to have you here again.
Thanks again for having me on, Paul.
And that's it from me, Paul Harris, at Digging Deep for Kitco Mining. And if you like what you see, don't forget to subscribe.